In 2026, a 5-year-old stock exchange overtook one that is 132 years old in a country with 6 dead currencies. Sounds made up? It is not. This is the Baobab Brief, and I am Tinashe. Picture this: June 2020, Southern Africa. A government walks up to its own stock market, a market that has survived 2 world wars, the collapse of an empire, and one of the worst hyperinflations in recorded human history, and switches it off. The way you would switch off a router that has been misbehaving. Have you tried turning the economy off and on again? Not one company, not one account, everything. Every share, every trader, every pension fund, dark overnight. And the official reason sounds like something a comedian made up at 2 a.m. One insurance company's share price was telling the truth. That was the crime. The number was accurate, and it was so dangerously accurate that the government decided that the only sensible response was to shut the entire market. If your smoke detector goes off, you generally do not conclude that the problem is the smoke detector. Zimbabwe on this occasion removed the smoke detector and then, in fairness, also the house. But here's the part that makes this one of my favorite stories in developing markets. Because out of that shutdown, a group of people did something audacious. They built a brand new stock exchange next to the largest waterfall on earth, in a country that once printed a $100 trillion banknote, and they gave it one unbreakable rule. A rule that, for a national stock market, sounds roughly as sensible as a swimming pool that does not allow water. It refuses to touch its own country's money. Every trade, every settlement, every dividend, US dollars only. The local currency is politely shown the door. 5 years later, that exchange has grown from a single listed company to 19 companies and about $3.5 billion market value. Its index rose more than 100% in a single year, while the S&P 500, the pride of global capitalism, managed about 18%. And in 2026, it did the genuinely remarkable. It overtook the 132-year-old Zimbabwe Stock Exchange itself. The 5-year-old outgrew the great-grandparent. This is a story about what people build when the normal tools have failed them. About a country with 6 dead currencies. We'll be counting the bodies shortly, producing one of the fastest rising stock markets on the planet. It is part financial ingenuity and part cautionary tale, and entirely fascinating. So how did they pull it off? What do you need to watch as it grows? And what does it tell us about every frontier market trying to do the same thing? Stick around, because by the end of this, you will never quite look at money or trust the same way again. And as always, none of this is investment advice. If you take investment advice from a video about a country with 6 dead currencies, that's a conversation for you and your therapist. To understand why anyone would build a US dollar stock exchange inside an African country, you need to understand one thing about Zimbabwe. It is the world's most extreme modern example of what happens when money dies. And understanding that is what makes everything that follows so impressive. In November of 2008, Zimbabwe's inflation hit a figure your brain is not really equipped to hold: 79.6 billion% month on month. Prices were doubling roughly every day. A loaf of bread cost twice as much at dinner as it did at breakfast, which is an exciting way to experience the concept of lunch. The central bank responded the only way it knew how to, by adding more zeros, which is the monetary equivalent of fixing a leak by drawing more taps on the wall. 10 million, then 10 billion, and finally the note that became a global meme: 100 trillion Zimbabwe dollars. And at its absolute worst, that note could not buy you a single bus ride. 100 trillion of anything, and you're still walking. Savings vaporized. People who had paid into pension funds for 30 years collected final payouts worth a few US dollars. A lifetime of discipline rounded down to the price of a sandwich. Getting paid turned into a sport. Spend every cent before lunch, because by tomorrow your salary was confetti. In 2009, the government did something governments find almost physically painful. It gave up. The Zimbabwe dollar was scrapped completely, and the economy switched to US dollars and South African rand. And here's the awkward bit nobody enjoys saying at parties. That decade running on other people's money was the most stable decade for prices Zimbabwe had seen in a generation. It turns out the secret to not having a currency crisis is occasionally to not have a currency. But no country enjoys living in someone's wallet, and you cannot blame them. So Zimbabwe kept trying to bring its own money back. Count the attempts with me, because the pattern is the whole point. 2014 bond coins, 2016 bond notes, solemnly pegged one-to-one with the US dollar, a peg the street believed for approximately no time at all. 2019 the RTGS dollar, then a fully reborn Zimbabwe dollar arriving with a ban on using foreign currency, which is a confident move for a currency nobody wanted. And in April of 2024, attempt number 6, the ZiG, known as Zimbabwe gold, a currency measured in milligrams of gold, backed by 2.5 tons of bullion and about $100 million in reserves. 6 currencies, one recurring screenplay, official optimism, a managed exchange rate, a quietly widening gap between the official rate and the street, then devaluation, then the credits roll, and they shoot the sequel. Hollywood would have killed this franchise after the third installment, Zimbabwe is on 6. And as we will see, the seventh idea was the clever one, because the problem was never the design of the banknotes, the problem was trust. Decades of money printing and famously murky public finances taught every Zimbabwean the same survival rule. The moment local currency touches your hand, convert it into something real. US dollars, goods, property, all. And this is the hinge the entire story swings on: shares. The Zimbabwe Stock Exchange was founded in 1896, one of the oldest in Africa. And in 2019 and 2020, it was booming. Charts going up and to the right, records broken every week. By the usual measures, a roaring success. It was, however, a lie, a very specific and rather elegant kind of lie. And the cleverness of how ordinary people saw through it is the first hint of the ingenuity to come. The market wasn't rising because companies were thriving. The economy was visibly falling to bits. It was rising because shares had quietly become lifeboats. When your currency is melting, you do not hold cash. You buy anything that floats. So stock prices stopped measuring what companies were worth and started measuring how frightened people were of the money. The chart was not a graph of optimism. It was a graph of fear drawn upside down. And one of the stock measured that fear better than anything else on the board: Old Mutual, a financial giant listed in 3 places at once: London, Johannesburg, and Harare, and crucially fungible. A share bought in Harare was the exact same share as one in London, the same legal object, just standing in a different country, which created a delightful loophole, and ordinary Zimbabweans spotted it before any central banker did. You could buy Old Mutual shares in Harare with Zimbabwe dollars, shuffle them onto the Johannesburg register, and sell them for rand. Congratulations, you have just teleported your wealth across an international border using the stock market as the transporter paid. No queue, no paperwork at the airport, just shares. That is financial creativity born out of necessity, and you have to admire it. But the loophole had a side effect, and this is where it gets beautiful. If the identical share trades in London in pounds and in Harare in Zim dollars, you can simply divide one price by the other and reverse engineer the real exchange rate. Not the rate the central bank announced with a straight face, the rate the market actually believed. People called it the Old Mutual implied rate, and that implied rate was always and always dramatically weaker than the official one. Businesses across the country quietly started pricing their goods off it because it had the rare quality in Zimbabwe monetary policy of being true. One insurance company's share price had become the nation's honest exchange rate, a thermometer the government could not confiscate until, of course, it tried. March 2020, the government suspends the fungibility of dual-listed shares, unplugging the transporter paid. The Zim dollar keeps falling anyway because reality is stubborn like that. June 20th, 2020, the hammer comes down. Trading on the entire Zimbabwe Stock Exchange is suspended. The whole thing. And when the wider market reopened a few weeks later, 3 companies were left frozen out in the cold: Old Mutual, the cement maker PPC, and Sidco International. Their crime: being listed in more than one country, a sort of guilt by geography. The finance minister Mthuli Ncube described it as a bold strike against the visible sources of currency instability. Critics offered an alternative phrasing, shooting the messenger and then arresting the messenger's two friends. The old mutual implied threat did not cause the currency to collapse, it reported the collapse, and smashing the thermometer, as any reasonable doctor will confirm, does not bring down the fever. Caught in the middle were more than 30,000 ordinary old mutual shareholders now holding shares they were legally forbidden to sell. In real terms, the frozen stock lost close to 90% of its value while the standoff dragged on. Years later, that freeze has still never been fully resolved. Hold that thought, it comes back at the end, and it's the thread that ties the whole story together. So now the government had a problem entirely of its own making. Three multinational companies stuck in limbo, foreign investors watching through their fingers, a stock exchange whose credibility was on the floor in several pieces. The obvious move was to reverse course. Instead, they did something far more interesting. They decided to build something new. The idea had been sitting on a shelf since 2012, gathering dust. An offshore financial center at Victoria Falls. It was floated gently and non-committally in the 2019 national budget, the kind of nice ribbon-cutting event for some day. The currency crisis turned someday into roughly 90 days. Nothing focuses the mind like having personally broken your own stock market. And to their credit, they moved fast. August 2020, the government publishes Statutory Instrument 196, a bespoke rulebook for a new market. And on October 23rd, 2020, the Victoria Falls Stock Exchange opens for business as a subsidiary of the Zimbabwe Stock Exchange Holdings, planted inside the Victoria Falls Special Economic Zone. And the design is genuinely smart because every single rule is, when you read it closely, an apology for a previous sin and a lesson learned in public. Rule number 1, US dollars only. Listing, trading, clearing, settlement, dividends, all of it in dollars. The local currency, the source of every prior catastrophe, is escorted off the premises. No Zim dollar means no implied rate, no thermometer means nothing to smash. They solved the problem of the honest number by building a market that only speaks in honest numbers. Rule 2. No surrender requirements. Normally, Zimbabwean companies that earn foreign currency have to hand a slice of it to the central bank at unfavorable official rates, a hidden tax rate that exporters loathe with the heat of 1,000 suns. Money raised on the Victoria Falls Stock Exchange is exempt. Companies can even keep it in offshore accounts at international banks. In a country world famous for capital controls, that is an extraordinary concession. Rule 3. Tax sweeteners. Zero capital gains withholding tax. Foreign investors pay just 5% withholding tax on dividends. This is deliberately generously inviting. It is the financial equivalent of rolling out the red carpet and genuinely meaning it. Rule 4. Cheaper fees than the Zimbabwe Stock Exchange. Settlement allowed offshore, and a full menu of products, shares, bonds, depository receipts, REITs, and ETFs. Now, why Victoria Falls? Trading is electronic. Much of the operation actually runs out of Harare. So why bother branding the thing to a waterfall hundreds of kilometers away? Because Victoria Falls is the one Zimbabwean name the entire world still trusts. Natural wonder of the world. Harare comes with baggage, hyperinflation, sanctions, political crisis. That one banknote. The falls come with rainbows and tourists. It was in the most literal sense reputational borrowing. When the credit of your state is stretched thin, you co-sign the loan with a waterfall. And honestly, it is a brilliant piece of branding. The Foreign Policy Research Institute later summed up the design. Victoria Falls Stock Exchange is a rules-based hard currency land inside a soft currency country, a signal that Zimbabwe was willing to build a fenced-off zone with international rules even as the domestic economy carried on burning in the background. Strip away the diplomacy and here's the honest sentence. Victoria Falls Stock Exchange is Zimbabwe creating a protected space where its best companies and its currency history cannot hurt each other. A safe room where trust gets a fresh start. There was just one tiny problem at launch. Nobody came. Victoria Falls Stock Exchange opened with exactly one listed company, Citco International, one of the three exiles from the June shutdown. Over a year, trading was so quiet that critics called it a vanity project, a stock exchange with more or less no stocks, a theater that had built a magnificent stage and sold no tickets. Underneath the silence, the arithmetic was shifting. The government kept sweetening the incentives through 2021 and 2022, and one by one, Zimbabwe's corporate aristocracy sat down and did the sums. Would you rather raise money in a currency that reliably loses its value in a year, or in dollars with lower taxes and the right to keep your cash safely offshore? When you put it like that, it stops being a difficult question. Padenga Holdings came over. Caledonia Mining, a gold producer, also listed in New York and London. Then the heavyweights arrived. Insco Africa, the country's biggest consumer company. Simbisa Brands, the fast food empire behind Chicken Inn and Pizza Inn across East and Southern Africa. This was not really competition between two exchanges. It was a vote of confidence with feet, the blue chips choosing the dollar market one by one, each arrival making the next company's decision easier. Momentum, the most underrated force in any young market, was starting to build. Leading the whole project, a CEO with an unusually specific dream, Justin Goni, chartered accountant, ex-McKinsey, former CFO of the New Zealand Stock Exchange, who came home with a blueprint. Copy the Canadian and Australian junior mining exchanges. Make the Victoria Falls Stock Exchange the place where African mining and exploration companies raise hard currency capital, then commodities, then derivatives, a venture board, eventually Pan-African trading. Ambitious, wildly. But you can point to one statistic most frontier markets would happily sell a kidney for. Since day one, every single trade on the Victoria Falls Stock Exchange has settled on time. A perfect record. In this part of the world, it does exactly what it says it will. It's not a boring feature. It's the entire foundation of trust, and they have never once broken it. 2023 annual turnover $26.3 million. 2024 $57 million, up 117% in a single year, with the number of trades up 31%. And savor the timing because the universe has a sense of humor. 2024 was the very same year the government launched the ZiG, its gold-backed sixth attempt at a national currency. So the patriotic currency project and the dollar exchange were growing up side by side in the same house, and capital, given a free vote, kept quietly choosing the dollars. 2025 was the breakout year. The Victoria Falls Stock Exchange All-Share Index finished roughly up 62%. Padenga was at one point up more than 140% on the year. Insco gained around 160%. Simbisa about 124% year on year. Fried chicken, it turns out, is an excellent inflation hedge. And here's the part that matters most. The numbers underneath the share prices were real. Caledonia revenue hit $267.7 million, up 46%, riding gold price that climbed toward $5,000 an ounce, and then peaked above 5,400 in January of 2026. Padenga's revenue came in at 265.8 million, with profit before tax up 140% to nearly 94 million. These were companies actually making money and actually growing, not just share prices making faces. This was a real economy finding a home it could trust. Then came the crown jewel, March 27th, 2026, Connect Infracore, the infrastructure arm of Telecom's billionaire Strive Masiwa's empire, listed on the Victoria Falls Stock Exchange at a valuation of roughly $1 billion US. Telecom towers, renewable energy, and prime real estate bundled into $1 earning platform. It was the largest initial listing in the entire history of Zimbabwe's capital markets, not on the historic, venerable 132-year-old Zimbabwe Stock Exchange, on the 5-year-old upstart down the road. The finance minister himself flew to Victoria Falls for the ceremony. The same office that had switched the old market off in 2020, now cutting the ribbon on its replacement. A full circle moment and genuinely earned one. A few weeks later, Zimbabwe's first ever ETF, a gold fund, naturally listed on the Victoria Falls Stock Exchange. REITs had already arrived. The shelf that was empty for a year was now genuinely stocked with the kind of products you'd find on any serious exchange. And by mid-2026, the scoreboard read Victoria Falls Stock Exchange market value, roughly $3.6 billion. Zimbabwe Stock Exchange, roughly $3.26 billion. The 5-year-old had overtaken the 132-year-old. The index was up 106% year on year against the S&P 500's 18%. and brokers were openly tipping the next wave of Zimbabwe Stock Exchange companies queuing to move. By every measure that counts, the gamble wagged. So the interesting question is not whether it succeeded, it's what to watch as it grows. No young market is finished, and the honest thing, the useful thing, is to name the questions a 5-year-old exchange still has to answer, not cracks before a fall. The growing pains every successful market has had to work through. Watch 1. Liquidity needs to deepen. Victoria Falls Stock Exchange is worth $3.5 billion on paper. Its average daily trading is around $240,000, and in May 2026, one quiet week saw turnover fall by 81%. In plain language, buying is easy and selling at scale on the exact day you want is still maturing. This is the most normal challenge a young exchange can have. Every great market started thin and grew thick. The thing to track is whether daily volume keeps climbing as more companies and more diaspora investors arrive. So far, the trend lining is pointing the right way. Watch 2. The gold connection. A meaningful slice of this boom rides on gold prices sitting near all-time highs. If gold cools, we would learn how much of this is durable transformation and how much was a tailwind. The encouraging sign is that the exchange is already diversifying: telecoms, consumer brands, infrastructure, real estate. Watch 3. The rules need to harden into institutions. Every Victoria Falls Stock Exchange privilege, the offshore accounts, the tax breaks, the exemptions currently exist by government decree, and the same state that holds a controlling 32% stake in the parent company. The reassuring development happened in May 2026. Oversight moved to a new offshore regulator, the Victoria Falls International Financial Services Center. Optimists call this the Dubai playbook, and Dubai is exactly the proof that this model can work when the rules are protected and made permanent. The watchdog is young and untested, but every durable financial center on earth was once a young, untested watchdog. The job now is turning good rules into trusted institutions. Watch 4. Bringing the whole country along. Every blue chip on the Victoria Falls Stock Exchange is a win, and the next chapter is making sure that that win reaches far beyond the dollar economy to the millions still paid in ZIG, the civil servants, the pensioners, and the street traders. A two-track economy is a real risk, but it's a kind of challenge that a thriving, credible capital market is far better positioned to solve than a broken one. You can't widen a bridge you haven't built yet. The Victoria Falls Stock Exchange built the bridge. Widening it is the work ahead. And here is the genuinely hopeful core of this whole story, which deserves top billing rather than a footnote. For the first time in a generation, there's a place inside Zimbabwe where money is handled by international rules, where a pension fund can hold dollar assets so that the next currency wobble does not swipe out yet another generation of retirements, where a nurse in Birmingham or a teacher in Johannesburg can open the Victoria Falls Stock Exchange direct up, top up in dollars, and own a slice of chicken in its parent company back home with dividends paid in hard currency into an offshore account. For a diaspora millions strong, that is not an abstraction on a spreadsheet. That is a bridge back home that does not collapse the moment you step on it. And the upside compounds from there. If Zimbabwe protects this hard currency rulebook, keeps things predictable, and keeps deepening liquidity, Victoria Falls Stock Exchange could become a real channel for international money, and maybe even a quiet bridge toward repairing relations with Western investors. Which brings us back to that one unfinished thread: Old Mutual. The company whose share price started this entire saga is still suspended. 6 years on, 30,000 shareholders still waiting, and the authorities' proposed solution for Old Mutual to list on the Victoria Falls Stock Exchange. It's the clearest possible signal that even the government now sees the new exchange as the place where problems get solved, not created. The thing they built to escape the crisis has become the thing they reach for to fix it. The crisis that built this exchange is slowly becoming the foundation it stands on. A stock exchange is at heart a machine that turns trust into money for growth. Zimbabwe's tragedy was that it ran clean out of trust, burned through 6 currencies worth of it. But here's the triumph hiding inside the tragedy. Instead of trying to fix trust everywhere at once, which had never worked, a group of people built a small fenced garden where trust could be imported in dollars next to the waterfall the whole world already believes in. and then they made it grow. Whether that garden eventually reseeds the rest of the country is the next chapter of Zimbabwe's story. And on the evidence so far, that's a chapter worth being optimistic about. If this kind of deep dive is your thing, please like, subscribe, share, and tell me in the comments, would you put a single one of your dollar on the Victoria Falls Stock Exchange? See you in the next one. That's the brief.